Welcome everyone here. This is Chris Capre, SecondSkiesForex.com and FXStreet.com. We're doing a weather report right now, which is a class completely focused on the Ichimoku Cloud trading. So we're back. This is the first class of the new year. And so hopefully you guys had a great holiday season. I hope you did. I did. And so we're going to be doing some interesting things today. I'm starting this off with we're going to go over some of our usuals, but then our third little case study today is going to be like a little Ichimoku Sherlock Holmes mystery. What dollars are those prices? Those are in US dollars. So yeah, that's what the prices are in. Anyways, so we're going to do kind of an Ichimoku Sherlock Holmes type mystery today. And we're going to do some kind of forecasting using some analytics. I have some amazing analytical programs that were built over the holidays, and that's kind of some of the tools that I'm working with now. And so this is what we're going to be working with as our third case study. Then we're going to go over the usual hit list of trades we recommend, or at least upcoming things that we're going to be watching. And then that's pretty much it. So let's go ahead and begin. Let me pull over my list over here. Okay, so first of all, there seems to be a rhythm to start off this week. Ichimoku Cloud trading usually has some sort of rhythm that usually kind of dominates through the week. And that rhythm is, dependent upon a lot of things. All the things that depend on is not really important. What's important is that you're able to discover the rhythm of how the Ichimoku charts are playing out for that week. Sometimes the 30-minute charts are going to be completely dominant. They will have the best and clearest signals all day, all week. Sometimes it will be the 5 minutes. Sometimes it will be the 1 hour. Sometimes it will be the 4 hours. Sometimes it will be the daily. But the key thing is to be able to find that rhythm. And for this week, there seem to be two time frames that are dominating the market this week. And that, from my experience, from what I'm seeing, what my analytics are telling me, the 4 hour and the 1 hour time frames seem to have the prettiest formations, both upon the structures of the Tenkan and the Kijun, the 20 EMA, their harmonics, and then also the Kumo and how it's shaped and formed. And so, with that being said, that's what seems to be dominant this week. And we can take a look at a few pairs just to kind of show. Here's the Kiwi on the 4 hour. Here's the Kiwi on the 1 hour. Notice it's a relatively steady Kumo formation. The lines have produced several solid signals in the past. This one was profitable. This one was profitable. All made about 100 pips each. Nice little Kumo structure here. If we go to the Aussie Dollar, we see a similar structure here. Slightly thinner Kumo, mostly because of the congestion here. But overall, the Tenkan Kijun cross signals are doing well. If we go on the 4 hour, we'll see the same thing here as well. We have nice harmonics of the lines. All three of them are in order. The Kumo is building nicely. We had a nice Kumo break that once it broke, it never really made it to the other side of the Kumo and then just continued climbing for 200 pips. So we've had good harmonics on the Aussie Dollar, on the 4 hour and the 1 hour. And it looks like the Dollar CAD and Euro Yen also have. Euro Yen has some good harmonics, but also has an interesting potential threatening structure here of a possible breakdown, with all three lines turning downward and the structure being held for a long period of time and now all of a sudden being broken. In fact, it broke, held, and then now is under threat. So we'll be going over this later as to what is the things that we're really looking at. But the bottom line is the structure seems to be intact for this week. The 1 hour and 4 hour charts seem to be the cleanest Kumo charts. So that is what Second Skies will be watching for this week. I won't be watching it much because, again, my programs are doing most of the trading. But these are the ones that are kind of on our watch list, so to say. Okay, so that is the one thing I just wanted to point out. So if you are going to be looking at Tenkan Kijun crosses, Kumo breaks, or anything like that, I'd highly recommend keeping your focus dedicated towards those two intraday time frames for this week. Now, the next thing I want to focus on is, actually we really have 3.5, 4 case studies, but let's go over that. I want to take a look at the pound dollar real briefly. Okay, so if we look from here, which was the beginning of December. December kind of started off on a sour note. It tried to rise, but then December was really just a bad month for the pound dollar. If you were getting our Ichimoku reports, we were forecasting that once it broke 6,200, it would probably make its way close to 5,700. We came within about 100 points of our target. It's still, falling, but the bottom line is that this thing had a very bad December. And look how many red candles, consolidation, and just a lot more red. Only the last few days of the year we're actually able to salvage something for the pound. The bottom line is that it had pretty much 1 month of declines. Now, the most interesting Kumo structure here is, of course, this flat top, which goes all the way until the 21st, 22nd of January. So we want to see if there's any other things out there that may coalesce with this. And what we have here is a 50% fib and a Kijun all posting up within about 20 or so pips of each other, give or take. So we feel that this is probably the most major upside test in the short, medium term that pound dollar is going to face. We think if somebody's going to throw reversal chips into the play, that's going to be between here, the 50, and the 61.8, and more probably isolated around here. However, we do have a lot of wicks. We have boom, 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 4 wicks here around the 63.80 area. So this could be a potential reversal or ambush zone if somebody is looking to go short. For us, this is the most interesting short to medium term price levels on the upside for the pound US dollar. On the downside, the most recent lows, and then we have the 157 down here as well. But the pressure is kind of on, and it has demonstrated that the 20 EMA, which it failed to close above it, rejected twice as off of it. And if you look, let me delete this line here. Take a look. These are rejection zones. Both of the wicks are above the 20 EMA, but none of them were able to close. Either day was able to close above the 20 EMA, and then today opened, climbed, and look at where it opened. Let's pull up the display data box. Price opened at 60.82. It climbed to a high of 61.52. Where was the 20 EMA? 61.50. So it went 2 pips past the 20 EMA, and then its current price, 60.39, means it's sold off 114 pips from that 20 EMA. So if you don't think this 20 EMA has some short-term influence on this pair, think again. It's obvious that the 20 EMA was probably the best play you could have come up with today, because that one was showing that there's an immense amount of rejection there. Okay, so to me this is going to be kind of interesting for the pound US dollar. Other than that, I don't really like the intraday structures on the pound US dollar. Why? Well, we can just take a look at this candle here. And if we look at this candle, take a look at it. We got wicks on both sides of the market. So there is a combination of agreement between the buyers and sellers, but there's no agreement about who's in control. In other words, nobody wants to take control yet. If somebody did want to take control, they would have a little more dominance as of now, and we don't have that. There is a little more pressure to the downside. So the bears have a minor amount of control over the bulls right now. Why can we say that? One, well, the pair is down from the open. Two, the pair opened, climbed, and then reversed very sharply down. So the largest moves to date within this day, within today's price action, we're with the downside. In fact, if we were to look at, say, something like a 1-minute chart, and I know you rarely ever see me looking at a 1-minute chart, but just to highlight it, this is where we opened, right around here. So we open right around there. Look at where the sharpest moves are on 1-minute chart. You can clearly see the most impulsive moves are to the downside. We've started a little bit of a rally to the upside, but even then, the most impulsive move, one move, wipes out a much larger, longer move. So it's trying to build some upside. And it's showing that there's two-way interest between the 20 EMA and 59.90. But the bottom line is that overall, there's been more control exerted by the bears than there has the bulls. And so with that being said, there's a relative agreement that it's two things really. Nobody wants to take control yet, and they both agree, both buyers and sellers both agree that price seems pretty stable somewhere between here and here, somewhere in the current area of where we are now. Why can I say that? Because we've had more price touches on that price level than any other single individual tick price for the entire day. So that's how I can say that. Okay, now we're going to look at case study number 2. To do that, you need to go to a different pair, different time frame. All right, Aussie yen, one of the more interesting charts for us today. Let me get rid of this thing here. Okay. So Aussie yen, why is this a more interesting chart for me? Well, it's interesting for a couple reasons. One, we have good harmonics between the Tenkan and the Kijun, at least right now. In fact, if I was to throw a 20 EMA in there, it's probably going to be right in the middle of all of them. Okay, it is. So they're all in order. All the lines are in order as of now. How much longer? Hard to say. But bottom line is they're all in relative order. 2, the Kumo structure has been pretty stable, and the trajectory has been stable. Very good, very important points. Trajectory and structure have been stable. So there is some good overall structural properties from an Ichimoku perspective on the Aussie yen. However, there is this thing called price action, particularly very recent price action, that actually has been somewhat impulsive to the bearish side. And let's zoom in it. For a while, it got parabolic. In fact, this is a parabolic curvature. Parabolic curvatures usually have pretty sharp fall-offs. And so, as you can see, this curvature increases till the top. Now, let's zoom into the more recent price action. We have a combination of some things in play. Here's your top. And we went right to the 61.8, which also is very, very close to a mid-pivot, I believe. Yeah, M3. So we had this mid-pivot, and we had this 61.8 right there. If the short-term Fibonacci players have their way, this thing should make it to the 161.8 projection, which is right around 82.98, 83. I would just gun, if I was a short-term player on this one, I would just gun for S1 and just say, look, that's my target. It does have some challenges. It has this 20 EMA right here on the 4-hour chart, which has not, if I delete this line, has not been broken since, how long ago? This thing hasn't been really closed below since the 23rd of December. That's quite a long ways away. So it has this first thing to contend with here. And this 20 EMA is positioning itself right at this M2 pivot. So it's kind of a double player. It's, you know, if somebody wanted to get bullish, this might be a decent place to do it. I'm sure if somebody did want to get bullish, though, they were paying attention to that fib projection here, which suggests that it wants to land right around the S1, 83.03. So if the bears are going to continue to exert some control in the short term on, say the rest of the New York session, S1 might be a very probable downside target. Also coming up right at this level is a climbing Kijun. So with the Kijun climbing, it makes for a pretty interesting place for somebody to take profit or to reverse positions here. So when you have two intentions on different sides of the market lining up in the same place, if you're short, that's generally a good place to take profit. If you're looking to get long, that's generally a good place to take long. Now, what is also interesting about this Aussie yen? Well, if we zoom into a 1 hour time frame, we are threatening to break below a Kumo and a pivot at the same time. Now, based on my analytical programs, which factor all kinds of variables, time, length of pip move, everything you could possibly imagine, tanking Kijun crosses, you name it, my analytics are telling me that this thing should probably find its way to also 82.34, which happens to be the S2 pivot, about 110 pip move. Based upon this move, the structure of it, the tanking Kijun cross, everything, all of my analytical programs combined suggest that this thing, if it were to get aggressive in its sell-off, would not just make it to the fib projection that we had noted earlier, which is this one here, and I'll do it again, 61.8 rejection to the 161.8. But if it were to actually have an hourly close below the S1, you combine all these other factors together, and my analytical program suggests it should make it to the S2. But it has to get somewhat more aggressive to do that. And so far, the U.S. session is kind of posting up as something of a banal session with mostly platitudes, since all the big moves were coming in early London trading, or mid-London trading. So just some notes on this Aussie yen here. Okay, now it's time to take a look at the Sherlock Holmes Ichimoku mystery we are going to embark upon. And to do that, it's really actually not too Sherlock Holmes. It's probably beneath him, but sounds entertaining. All right. Let's pull out pivots for now. And we are going to take a look at, not Aussie yen, but Kiwi Dollar. This is our case study for today. Now, Kiwi Dollar has had quite an impressive move. It's climbed from sub 7,000, big figure, to 73.50, 73.60, almost made it to 74. So it's had about a roughly 360 pip move, give or take a few pips. Now, I want to take a look at a couple things here. First of all, this move, once it broke above the Kumo, in fact, it broke above it very convincingly. Notice how it settled back right to the Kumo top and the Tenkin, and then continued to climb up with only one major breach, bouncing off the 20 MA and then climbing the entire time. So the price structure is that the Tenkin, the 20 MA, should probably hold it if this move is going to continue. If we see closes below the 20 MA, then that would suggest that the structure is weakening. And if we were to see something like that, the important question becomes, in the short term, where would the Kiwi Dollar reverse to if the structure breaks? We'll talk about the opposite scenario in just a second of where do we think it could go on the upside. But let's talk about where we think this thing may go if the structure breaks. So if we measure the relative time, I mean, this is a pretty well-paced move. This move actually started on the 29th. Now, if you count the overall trading days, 29th was a Friday. So considering that the markets didn't reopen back up till the, 29th was, my apologies, was a Tuesday. So considering that the markets only had 3 more days of trading, Wednesday, Thursday, and Friday, this thing took a total of 1, 2, 3, and then Sunday, Monday, and Tuesday, So from here all the way up to here, 29th and 30th, so we had 30th and 31st. The markets weren't really open on the 1st. They were closed. So 30th and 31st, and then 3rd and 4th. Sunday not really being much of a day. But it pretty much ended up here in about 4 days. So that means that this pair, if it were to move aggressively to the downside, should take about 4 days to travel the same distance from about 71.46 to 73.50, 200 pips. So now, if it should take about 4 days, 4 days from the 5th today, in looking at trading days, would be 6th, 7th, 8th. 8th is a Friday. That means right around the 10th. Let's take a look at the 10th. See if we have the 10th on here. Nope, it's off the chart. Okay, so the 10th is off the chart. Makes it a Sunday. Now, let's take a look at something else here real briefly. Let's go to the daily chart. Now, before we go to the daily chart, my analytical programs have pretty much computed how much of a measured move this type of move with this kind of structure, including a Tenkan-Kijun cross and a Kumo break and about 3 other variables. My analytics are telling me that if this thing were to complete a series of events, it should move about 300 and some odd pips, roughly 300 pips. Now, that's after it were to complete the reversal of this move to this move. Okay, so let's take a look at that. Real briefly, let's step out to the daily structure. If we step out to daily structure, there's a pseudo pattern in place. It's not exactly the best. But we have 3 touches on the bottom, and we have only one possible touch. I couldn't draw it like this because that's already been violated. So it really wouldn't do me any good. So I have to do it as a parallel line because the contracting wedge has already been exposed. So with that being said, if this were to continue to the upside and hold a potential channel structure, it would probably run into some sort of resistance right about here, 74.50. Now, if this channel holds itself in place, if it does hold itself in place, remember, it should take about another 4 days if it moves straight down. Straight down. But assuming that it plays off of here, let's add another couple days, so about 6 days. Today is what, the 5th? That would make it about the 11th. 11th or 12th. Actually, that'd make it the 12th because of the weekend trading. So around the 12th, it may start some sort of decline. Now, how long did it take this pair to go 300 pips? Well, here is 300 pips. Let's zoom in. Okay, so 300 pips is from here to here. Very aggressive move at the end of the year. This is the 23rd, 4th, 5, 3, 4, 5, 6, 7. Wait, sorry, 1, 2, 3, 4, 5, 6, 7. 8 candles. 8 candles. So that means it should take about 7 to 8 candles to move 300 pips down. So assuming in about 4 days we go and go back down and we decline to where this whole 4-hour Kumo break started, which was back here. So here we are in 4 days from now, possibly right around 71.50. Then we should have approximately, going back to the daily chart, another 300 pips, roughly, to the downside. Let me redraw this structure here. Okay, this is if the channel holds. It's just kind of an interesting if. If the channel holds, drops another 200 pips from current price, which is 73.67. That means that 200 pips would make it 71.67, plus another 300 pips is what my analytics are telling me, if it does break down. And if that happens, that would be a total of 500 pips from 73.65, which would make it 69, what would that make it, 68.65? So right around here roughly, which is right around the end of this channel. So now if we add 4 trading days to today, which would be 6th, 7th, and 8th, plus the 10th, and then it took another 7 trading days, 7 to 8 trading days, we're talking 11, 12, 13, 14, 15, 17, 18, 19, 20. That means right around on the 20th, it should make it here to this relative price level. So between 68.72 and 6900, if it does hold this channel and then plays to the downside, it should take approximately to the 20th to get there. Now, how am I getting the numbers of 300 pips? I can't necessarily reveal that secret because that would be giving away some of the parameters behind my analytical programs. But let's just say I have a program that can analyze anything you can possibly imagine when it comes to Ichimoku Cloud. Like if something does a Tenkan-Kijun cross on any time frame, what would be the average pip move that I should have expected out of it? That's what I was working on over the holidays and was able to complete. I built another analytical program that said if I was to get a Kumo break on any time frame, what is the average pip move I should expect if certain variables are in play? So combine a bunch of Ichimoku analytical programs together, and that's where I got the 300 pips from. Now, Boyke has an interesting question. Why did I not join the second high point? Are you talking on the daily chart? My guess is you're talking on the daily chart. Is that what you're talking about? Daily chart? Yes. Okay. So let's go over that real quick. Why did I not join the second high point? You mean this one right here, which is in the middle of November? Is that the one you're talking about, Boyke? Yes. Why? Because that one has already been violated as a trend line. So as a trend line, it no longer matters. I could say, yeah, it may go up to here, but the more, I really don't have any basis. I have nothing to pivot this off of. I can't use that as a fulcrum. How could I use it as a fulcrum if the only way I can use it as a fulcrum is to join it with a line here and here? And again, price has already violated it. So the only thing I can use it as is just a simple swing high. That's all I can use it as. Now, there is one convenient thing about using this as a simple swing high. Any guesses as to that? And while you're answering that question, I'm going to take a sip of water. So what is the one convenient thing about using that as a swing high? Should be relatively easy to answer this question. Any guesses? None whatsoever? I'll take a third sip, give you a last chance. Well, wow, you guys must have really been on vacation. It was before Xmas? Okay. That is a true fact. Yes, it was before Xmas. That's not what I was looking for. But you guys have definitely been on vacation from charts. The answer is so right in front of you. Look at where the price level is. 7,500. It's a round number. So that would make it a very convenient point for any sort of bear reversal there. However, it doesn't quite line up with the structure of a potential channel. But again, we don't even know if this channel is going to be confirmed yet. We need a second touch minimum to confirm a channel. 3 touches is good, 2 touches minimum. Now, Abel has a question. Is it the norm to disregard trend line if it has been violated? Is it the norm to disregard a trend line if it's been violated? That's an interesting question. The way to answer that, or the way I will answer that, is it depends on the type of trend line it is. If it's a trend line from a channel, then you would disregard it if we've had a breakout of sorts. So let's say we had, in fact, a really good example of this would be Euro Dollar. This would be a fantastic example to talk about a trend line that we didn't want to disregard. So there we go. Now, why would we not want to disregard the break of this trend line? Why? Because this thing used it as resistance the following day. So under channels, I generally don't disregard them until after it's been violated and retested. In this case, it's been retested. So now that it's been retested, I really don't have any need to continue to pay attention to it. There's no need for it anymore. It no longer really matters. That structure is forgotten. Trust me, traders, institutional traders, once they see this move, they're done with that channel. They're already moving past it. They're working on other things. They're not using this again and again and again. It's done. Listo. So in that case, yes. However, if it's just a single trend line, if there was no channel, then you can apply the same logic as you would a channel, but it's not as powerful. Why is it not as powerful? Because a channel is a much more stable structure than a trend with a single trend line. Any channel is going to have far more structure to it than an uptrend with just one trend line. Why is that? Because in a channel, you have both the upside and the downside measured and targeted. So there's clear parameters for the upside and the downside. In just a single trend line, you just have that one line that's being respected. The upside is amorphous, it's nebulous, it's ambiguous. So with that being said, it depends on the trend line, Abel. It's a very good question. Most trend lines, I would disregard them once they've been violated. The only other exception to that is, certain trend lines on daily, weekly, or monthly charts, if they've been holding for a long period of time and they've had several tests, several meaning a minimum of 3, then I might be open to paying attention to it if it's been disregarded. But again, the method is still the same. If it's been violated, we just pay attention to it until it's been retested, and then once it's done being retested, we just throw it away, and that's it. It's an excellent question, though. Okay, Jack has a question here. Going back to the Kiwi Dollar. Sure, let's do that. So going back to the Kiwi Dollar for Jack's question is if it closed above the Kumo and today and above 73.15, which indicate it may end at a 23 fib support, is so strong to push out Kiwi. I don't totally understand your question. Are you talking about the daily chart? Are you talking about the 4-hour chart? Help a brother out here. Okay. Daily. Okay, great. Thank you for that. Okay. Okay, so you're saying if we break above this here, we have retested the Kumo. The Kumo has acted as a great support today. What was the low for today? 73.21. What was Senku span B or span 2 in this case? Span 2 is 73.25. So this thing went 4 pips past the flat top and then has since bounced. Now, you're talking about it being the 23% fib support. Are you talking about from this day right here? Just from this day, if I were to take the low to the high? Is that what you're talking about, the 23 fib support? I'm not sure what you're talking about, the 23 fib supports. It's hard for me to comment on that. 23% total of this entire move? Hard to say. I don't pay attention to or are you talking from the down move? You might be talking from the down move. Are you talking from this down move? From 4,900. 49, you mean like way down here? Is that what you're talking about? Good Lord. Well, if you are, let's do it. Okay, you're talking from way down there. All right. First of all, let's see if you're correct. There is approximately 320 pips between them. So I don't see how this is the 23% fib, 49 to 76. Yeah, I don't think this is the 23% fib because there's 360 pips between the two, between all the fibs, and that means if I had another 360, that would put it at 68, 69.40. Ah, so you're saying this thing right here. Okay, finally I'm starting to get what you're saying. I was like, a little confused. Okay. So, there we go. All right, we're on the same planet. This is good. So now your question is, with this thing bouncing off 60, the 23% fib, if closed above Kakumite and 73.15, which indicate payment, may indicate that support is strong, so push up in Kiwi. Well, bottom line is, it wouldn't even matter if this was the 23 fib. I'll get into that in a separate conversation here in just a second, but let's just assume that it is. And this is kind of a big assumption. Let's just assume that the institutionals are paying attention to this 23% fib, which I doubt. I know some of the, most respected fib, instructors, traders on the planet, people that get paid thousands and thousands of dollars for their fib analysis. That's a month. I mean, they get paid, $10,000 to $20,000 a month just for their fib analysis. They don't use 23% fib. They only use the 3 major. And it's a big discussion, which I really don't want to get into right now. But let's just assume that you are correct, that this is a 23% fib, and that's why they're paying attention to it. Does this mean a big push up in the Kiwi dollar? You know what? It almost doesn't even matter for a couple reasons. One, we've broken a major trend line here. So, or at least some decent trend line here, something of a trend line. 2, we've broken above the Kumo. 3, how many closes have we had in a row that were bullish? 1, 2, 3, 4, 5, 6, 7, threatening to be 8. It doesn't even matter whether this is the 23% fib right now. We don't want to be looking short right now. We've had 8 bullish closes in a row. Price action alone suggests we keep trading in this direction until it ends. So, with that being said, I would actually look for, sorry, not that structure. I would say just simply look at the potential channel and see if it breaks the potential channel threatening. Then you really got 2 more significant highs. You got 76, 75, and 76. After that, then we can start to look at that 23% structure being a strong push up in Kiwi. But the bottom line is that if that is the 23.6 and the institutionals are getting the 23.6, I don't totally buy that. But that's just me. If the institutionals were getting in at 23.6, we would have a massive push to the upside. And unless you really have the capacity in your account to hold through those kinds of wild swings, this 23.6 isn't going to be that useful to you. I mean, how many trades, Jack, have you held for something like this to play itself out and go to the 23.6% fib retracement? I mean, let's just see what the 38 is. Okay. The 38 is at 86.60. There's 330 pips apart from them, so we're talking 83.30. So my first question of you would be, how many 1,000-point trades have you held on to? 2, how long would it take this to go 1,000 pips? You're talking about 4.5 months. How many trades have you held for 4 months? And so I'd ask those questions. Other than that, then if you haven't held trades for 4 months and you haven't held a trade for 1,000 pips, then I would look at this from a different perspective and say, okay, whether it is the 23% fib or not, let's just say it is, then how do we trade it now? How do we trade it now if you're not already in it? If you're not already in it, you'd have to look for a break of 75 and 76 before we could even consider it going to 83. We'd also have to look at, this flat Kumo structure, which suggests that it may want to continue to gravitate here for a while. If we were to look at that, we got this very flat Kumo structure here. So it may want to hold that for a while. So with all those being said, is if you're not already in this right now, the 23.6% move really doesn't have any useful to you other than potentially going up to 83. And if it is going to go up to 83 and you're not in it now, you have to ask the important question, how do I get into it? And so that would be the more important question, at least from my perspective, from a trading perspective. So that's my analysis on that one there. But it's an intriguing question. If I was to answer this from an Ichimoku perspective, I would actually go to my analytical program, and Jack is saying aggressive long may enter at a Kijun breakout. I'm not sure what you mean by a Kijun breakout. You might have to be more specific. But I would have to look at my analytical programs and see what they would say as to how far this move is going to go. Generally, daily Kumo breaks do not send this thing 1,000 pips. Do we have a weekly Kumo break? No, we don't. We don't have a weekly Kumo break yet. So we don't have a weekly. This weekly Kumo break happened a long time ago, over 2,000 pips ago. So it's really hard to say. I will say this, though. If you've read my Ichimoku report, you will notice that I talked a lot about the upside being the line of least resistance for the Kiwi Dollar. And I think that still holds. Why is that? This move right here on a weekly time frame, this is not impulsive. This is relatively corrective in nature. You know, it's pretty corrective. Yeah, we have some impulsive red moves, but they get smaller and smaller as time goes on. The biggest one, then the medium-sized one, then a little one. Now, all of a sudden, the up moves, which were getting smaller and smaller, are now getting bigger and bigger. So those combinations suggest that the line of least resistance is the upside. It does have its hurdles at 75 and 76, but the line of least resistance is still to the upside. Third case in point, the 20 EMA has held every single weekly attempt to close below it. It has still yet to actually close below it. It's had fades below it and rejections below it, but no actual closes below the 20 EMA. And so that is still acting as some support. So right now the line of least resistance is to the upside. Fourth case in point, Exhibit D, is we have an incredibly strong Kumo structure. We have a very strong Kumo structure. It's thick. It's got great trajectory. As time goes on, and I see it highly unlikely that this thing is going to get to the bottom of the Kumo by the end of February. I mean, that would be an 800-point move. It could do it. It could do it by the end of February, but yeah, it's got its work cut out for him. But let's assume it doesn't. That means as time goes on, the Kumo is going to act as support to continually push this thing up. So the base for the Kiwi Dollar is building. So there are a lot of things in play right now which really suggest that the line of least resistance for the Kiwi Dollar and the Aussie Dollar, if you read my Ichimoku report, which is free, is to the upside. So overall, I would rather be long than be short on this pair. In fact, I'd rather be long about 70% of the time. In other words, if I was to take 10 trades on the Kiwi Dollar over the next month, I'd rather 7 of them out of 10 of them be long. So hopefully that answers your question there. Asha is saying, what analytic program you're using? Is this proprietary? Yes, it's proprietary. It's something me and my programmers built. It's actually a combination of analytical programs. So while most people are on vacation, I decided to actually work over the holidays. Why? Because I wanted to have the majority of 2010 to be a semi-retirement year for me. And I figured if I worked really hard for 2 weeks, I could get most of it done. I really only have one more thing standing in my way from going into semi-retirement. That's my book. Once my book's done, I'm on semi-retirement for 2010 and maybe for a while. So yeah, but what are they? They're proprietary. Can you get access to some of that information? The answer is yes. It's on my upcoming Advanced Ichimoku Cloud Trading course. So, okay, so I have just enough time which is going to be launched this week. Now, I have just enough time to go over my hit list, which actually is a fair amount. And the answers to my hit list have actually kind of already been revealed. They're in the 1 hour and 4 hour time frames. So let's take a look at what I have. I have Aussie Dollar. Let's start with Aussie. You notice I'm not saying euro and pound. Aussie Dollar has the potential for a nice Tenkan Kijun cross formation. And so far the price structure supports it. So if we get a Tenkan Kijun cross to the upside, keep an eye on that one there. It could produce another leg of upside. Plus the Kumo structure is also supportive of it. The contrarian move to this is the Kumo is also building for a nice Kumo break. If it were to break this Kumo, we could see a pretty decent sized down move in the Aussie US dollar. So we have both sides, whether you want to go long or short. We have both scenarios and what they should look like for you if you want them. Is there a 4 hour? Okay, there is. And it's the exact same thing. This might actually actually produce another Tenkan Kijun across the upside in the 4-hour. It'd probably take about 3 or 4 days to do that, but I wanted to throw that out there because it could happen this week. Also, it also has a decent enough structure for a Kumo break. That means that by the time it gets here, if it were to break this Kumo, it could produce a pretty decent sized move in it. So keep an eye on this one here. Let's go to dollar CAD. And dollar CAD has two scenarios on the 1-hour time frame. Okay, so it has a potential Tenkan Kijun cross to the downside. The only thing about this is that the Kumo structure is nice, but the limit is that you only have really till about 102 before you'd see some really tests. However, if you are a bull, I would just say wait for a 1-hour Kumo break if you wanted to take an upside move, and that would be the play you'd want to watch. Okay, Kiwi Dollar. On the 1-hour and 4-hour, same thing as we've been talking about all day. Watch the Tenkan Kijun cross to the upside for bulls. For bears, watch the Kumo break on this one here. And it's the exact same scenario on the 4-hour chart. Watch for Tenkan Kijun cross the upside if you're a medium swing term trader, or if you're a medium larger bear, watch for a Kumo break on this one here. And the last two on the hit list. 4-hour. I'm almost going to give up on the Tenkan Kijun cross to the upside. However, I will keep it valid and open for maybe a couple more days. It's going to have to work really hard to reconvince me of that. However, this is showing some signs of a potential strong Kumo break in the making. Probably take about 2 days for that to happen, but something we have to pay attention to. And the last, Aussie Yen, which is actually one of my favorite structures for this week, has two possible formations. One of them is the Tenkan Kijun cross the upside. The harmonics on this one, both in the lines and the Kumo, are very nicely set up. However, if you were a bear and you're a contrarian, I would say wait for a Kumo break before you take on the downside in this one. Euro USD is not on my hit list. Actually, I really didn't like Euro Dollar and Pound Dollar structures this week at all. They looked actually quite awful. So let's see. Harry says, so I trade algorithmically now, Chris. Actually, yes, and that was part of the goal, was to get as algorithmic as possible this year, to the point where I could work maybe 3 to 4 hours a day max. That would include training, teaching, classes, customer support, and everything. And so, yeah, that's my goal, and I'll probably be there in less than a month. Once the book is complete, I'm pretty much in semi-retirement for the year. So I got lots of things I want to do, lots of vacations, lots of travel, lots of adventures. And I can do that because I have the time and the money to do that, and my trading is mostly automatic now. You think it's Brazilian girls that want me to retire. I'm not going to get into that one there, but we'll talk about that one later, another day. Boyke says, I'm in Argentina. Yes, as Boyke points out, I'm in Argentina. But there are plenty of Brazilian girls here. So, anyway, so that's my hit list for today. And so that pretty much covers everything I wanted to talk about today. So if you have any questions, keep an eye on our website. You can sign up for the Ichimoku report. You can also see it on fxstreet.com as well. It's a weekly one, but you can also see it at secondskiesforex.com. And also check an eye on the site. Tomorrow or the next day, we'll be launching 2 online courses, an advanced price action and pivot point course and an advanced Ichimoku Cloud trading course. So take a look and check out. Those will be done in 24 to 48 hours. Everybody's been begging for an advanced course on Ichimoku Cloud trading. You got it. So that's why I was working. Okay. Other than that, I want to bid you all adieu. I want to thank Maud and Adinda for recording this webinar. Thanks FX Street for hosting us. And let's go over the list of people here. Wayun, Harry, Anthony, Inya, Boyke, Neil, Leonard, Melanie, Eric B, Simon Ho, good to see you as well. Ashu, Burton, Linda, Jesse, John Azul, Kevin, Yaki, Trader, Forex Champion, good to see you. Wolf, good to see you as well. Yeah. Abel, Mike V, Adam, Kusar, Mufti, Din, Jack, Tima, Guardo, Crockett, Jamie Crockett. Nick, FX Newbie, Wen, good to see you in San Francisco. Jocelyn, MC, Midoru, Ed, and Jasper as well. Thank you all very much for coming. In the meantime, I want to wish you the best of luck in trading. It's good to see you guys in this new year as well. Yeah, you can read my New Year's resolutions. I was a little candid on them. a little vulnerable and a little candid. But thanks to all you guys for coming. It was great having you here. And I will be seeing you next week. Same Ichimoku time, same Ichimoku channel. Till then, good trading, everyone.